How many of you are watching on laptops and how many of you are using mobile phones?
Obeyed on laptop.
Okay.
Watching.
Anybody on mobile?
Yes, sir. Mustafa is on mobile.
Tajamul also.
Whether it is a mobile, okay, whether it is a mobile or laptop, it is a product. Am I right? It's a kind of product. Am I right?
Yes, sir.
So let us assume this is a product. Finished product. Let us take example laptop. Who sold you to the laptop?
Supplier.
Supplier. Or a retailer, we can say.
Yes, sir.
Yes.
Yeah. This is you. For you, it is what? Purchase or sale?
Purchase.
For retailer, it is what?
Sale.
Somebody supplied, right, to the retailer.
Yes.
For him, it is what? Now, connection bit here. It is sale. It is purchase. Supplier, who supplied this product? Who supplied this product to supplier?
Manufacturer.
Manufacturer. For manufacturer, it is what?
Sales.
For supplier, it is what?
Purchase.
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 Now our context is this, not neither supplier, not retailer, not the customer. Okay, he sold one laptop. So what is the minimum price that charging in dollars today?
45 to 50,000.
Dollars in dollars.
Average 1,000?
1,000.
1,500. Yeah.
Okay, let us take 1,000. No problem. $1,000. So this manufacturer sold this laptop $1,000 per piece in the market. What is this? Is it selling price? Am I right?
Yes, to the manufacturer's
Yes, sir.
selling price.
Selling price. In the entire 1 year, this manufacturer might have sold how many laptops? Example. Let us take some example. He might have sold how many laptops?
2,000.
2,000 laptops. So what is this?
Number of
Sales
units.
units, correct?
Yes.
units, we can say. What is this? Selling price, correct? Okay. What is the total sales? What are the total sales value? What is the total sales value for this manufacturer if number of units sold 2000 and 1000 is the selling price?
2 million.
2 million.
2 million. In CVP analysis, one of the assumption is all manufacturing is equal to sales units. If not equal, we'll discuss in advanced level what will happen. As of now, assumption is what is manufactured, that is sold. Please keep it in mind. What is manufactured, assumption in CVP analysis, that entire thing is sold. If not equal, what will happen, that is a different thing we will discuss later on, not now. Okay, keep it here, this thing. Can you tell me how we got this 2 million?
Sale price into units.
Fine, very good, excellent. Now, if I will ask a grade 10 student, if a manufacturer sold some total sales, can you put it in another equation form? Total sales are always equal to
total cost
Hmm.
plus profit.
So he will tell, yes, total sales always is equal to cost plus profit. Will you agree with me?
Yes.
All of you?
Yes. Yes.
Yes, sir.
Another assumption
Yes.
of CVP analysis, costs either can be classified into variable cost and fixed cost. That is also assumption. There are few costs it is difficult to segregate purely as variable cost, fixed cost. However, some methods are there that is considered as semi-variable costs will be segregated into variable cost and fixed cost. That is the assumption. If this assumption failed, so it is not possible to analyze the problems. So this is also another assumption.
So, sorry for disturbing you, sir. Sir, what is absorption cost? Sir? Absorption can you just
Full
define it?
costing, that is full costing.
Full.
That is full
Including variable and fixed.
Yes, variable and fixed. Here, the marginal costing is basically variable costing is costs can be divided into variable cost and fixed cost. Normally, in absorption costing, we will include variable cost as well as the fixed cost. Okay, cost of goods sold include variable cost as well as the fixed cost. But whereas in marginal costing, in the CVP analysis, we segregate cost, variable and fixed cost. So in variable costs, these costs are product costs, and fixed cost we assume it is a periodical cost. This is the difference. Okay, understood, Sajid?
Yes, sir. Understood.
You have been. Is everybody there?
Yes, sir.
Yes, sir.
Okay, fine. So first assumption, what I have told you, CVP analysis, first assumption, what is manufactured, it is sold. Second assumption, we assume all costs can be easily segregated into variable cost and fixed cost. Right? Clear? Up to here, clear to everyone?
Yes, sir.
So now we need to understand what is the variable cost and fixed cost. Let us take the laptop itself. Let us take the laptop itself. This is the laptop. Now tell me what is variable cost and what is fixed cost in this laptop is included according to you.
Spare parts is variable.
Spare parts.
Labor.
Labor.
Shall we assume as a material?
Yes, material.
Then labor, correct? Then what?
Overhead.
Manufacturing overheads.
Overheads, variable overheads. Manufacturing overheads in that variable overhead. Administrative overhead in that variable overhead.
Selling variable. So
Yeah, selling and distribution variable, that includes in that one. That includes. Now, what should be example for the fixed cost according to you? 2 examples you can give.
Depreciation
Depreciation.
of machine.
Rent. Rent of rent.
Yeah, rent. To manufacture this laptop, we need machine. So machine we might have purchased for 10 million. It is useful for 10 years, example, this machine. So what is the fixed cost here?
100,000.
1 million. 100,000 or 1 million? 10 million machinery,
1 million. 1 million.
1 million. So this is one of the examples. So this is nothing but a depreciation. That is the point. And rent, we will be paying some rent like that. So now you tell me, if I am manufacturing 0 laptops, assume manufacturing is equal to sale. If I am manufacturing 0 laptop, I need to incur material?
zero.
No.
No, sir.
0. Is it needed to spend on labor?
No, sir.
No. 0. Variable overhead?
No, sir.
Selling and distribution overhead?
No.
Variable? No. 0. If I manufacturing 1 laptop, say for example, let us assume material I am using $500. Labor I am using $250. Variable and selling and distribution I am using $250. What is the total? $1,000. I took extra. So let us take it 250, 125, 125. Now tell me, what is the total?
500.
$500. If I'm using 1 laptop, how many dollars I need to incur?
500.
If 2 laptops I have manufactured, not using
1,000.
1,000. 10 laptops,
5,000.
5,000. 100 laptops,
50,000.
1,000 laptops,
500,000.
500,000. 2,000 laptops,
1 million.
1 million.
Now the capacity of the company maximally, let us assume 2,000 laptops. Capacity that in 1 year the company can manufacture 2,000 laptops. We assume entire capacity used and it has incurred the expenditure and sold it. Now tell me, what is the fixed cost? Let us take here 5 million. If it is used for 10 years, the depreciation and all, 4 million, this is the so and so, the rent and depreciation, total fixed cost of the company is, for example, 500,000. Let us assume in that 500,000, including, not this example, forget about this. Total fixed cost is 500,000. Now tell me, this is the variable cost. One laptop, 0 laptop I have incurred. What is that cost I am going to incur per annum for fixed cost?
500,000.
500,000. One laptop,
Even 500,000.
500,000. 2 laptops,
Same.
500,000. Everything when you check, anyhow we are going to incur the 500, which is sunk cost actually. Before manufacturing begins, we will incur these expenses. So that's why the fixed cost doesn't vary with the production volume to a certain limit. To a certain limit within the relevant range. That is called the within the relevant range. So this 2000 is considered as the relevant range. Up to 2000 laptops, company fixed cost is only 500,000. If it wants to produce more, it has to buy new machine, it has to take new building, factory building to manufacture. So that means the relevant range is crossed. So relevant range means within the capacity, how many number of units to be produced and sold, that is considered as a relevant range. So that means here the fixed cost nature, whether you manufacture or not, the fixed cost you need to incur 500,000. But whereas variable cost, if 0, there is no cost. If 1 laptop, it increases. So if we put all these things in a graph, if this is units, if it is dollar value. So now tell me, fixed cost, whether your unit 1, whether unit 2, whether units 100, whether units 1000, whether units are 2000, up to 2000 units. What is your cost?
500.
500,000. So that means when you draw a graph of every unit, starting from 1 to 2000, the fixed cost line will be like this. Variable cost, if your production is 0, your cost is 0. 1 unit, your cost is, just now we calculated 500 per unit. It will go like this. So when you draw the line, this is the variable cost line. This is the fixed cost line. Are you getting me, all of you?
Yes.
Is it clear? So if we discuss now variable cost is related with production.
Yes.
If production increases, what will happen?
Very
Variable cost increases. If production decreases, what will happen?
good degree.
Okay. If production is increasing, means which variable cost will increase? Total variable cost will increase
Total.
or variable cost per unit?
Total, sir.
Total variable cost will increase. If production decreases, total variable cost will decrease. But whereas if you talk about variable cost per unit, whether your
Constant.
production is 1 unit, per unit cost is 500. 2 units, per unit cost is 500. This is also another assumption. CVP analysis, another assumption. There is no change in the variable cost and fixed cost. This is also another assumption. If change happen, that is a different thing. But in general, by default, what is the assumption? Within the relevant range, neither fixed cost will increase, decrease, nor the variable cost will increase, decrease. If increases, decreases, that is analysis. That is the analysis. Management will do the analysis. But what is the assumption? Again, this is fourth assumption. Relevant range is one of the assumption. Within the relevant range, neither variable cost nor fixed cost will increase, decrease. If it increases, that is a different thing. By default, CVP analysis assume no change within the relevant range. That is the assumption we need to consider.
For
So
both, sir, for both variable and fixed.
both.
Oh.
So now we are discussing two costs: variable, fixed, total per unit. Now tell me, if production is increases, total variable cost
Increases.
increases. If production increases, I will write the production here. If production is increases, total variable cost will increase. Here, per unit, variable cost per unit,
Equal.
Constant.
constant. It
Constant.
doesn't change per unit variable cost. Same goes with the opposite direction. If production decreases, so in that case also, total, this is variable cost, this is fixed cost, this is per unit. So production decreases, total variable cost decreases.
Decrease.
And per unit, whether production is increased or it doesn't matter, it is a constant.
Constant.
It doesn't change. Constant means per unit cost doesn't change. Constant here means per unit cost doesn't change. Okay. Let us take fixed cost. If production increases, total fixed cost
Decrease.
constant.
Total constant.
Total constant.
Yes.
It
Total
doesn't
constant.
change. Total fixed cost doesn't change.
But unit in change, sir.
Yeah. Now unit, you tell me, if 500,000 units, one unit, what is your variable fixed cost per unit?
500,000.
2 units, what is your fixed cost per unit?
250.
500,000, 5 units, what is your variable cost per unit? Sorry, fixed cost per unit?
100.
500,000, 10 units, what is your fixed cost per unit?
50,000.
500 units, 2,000 units, what is your fixed cost per unit?
500.
No, not 500, 2,000 units.
5,000. 5.
250 per unit, correct? 500,000 divided by 2,000.
Yeah, 250, sir.
Now tell me, what is happening? Fixed cost, if production increases, fixed cost per unit
Decreases.
decreases. Variable cost, if production increases, total variable cost will
Increases.
Increase.
If production increases, fixed cost per unit,
Decrease.
this is inverse proportion relation, correct? This is direct proportion. Direct proportion to total variable cost. Inverse proportion to fixed cost per unit. Now, what will happen fixed cost, total fixed cost, if production decreases?
Total
remain
fixed
same.
is constant.
Constant.
Even it is 0 also, it is 500,000. What will happen if production is decreasing from 2,000 to 10 units? 50,000, 100,000, 250,000, 500,000. What is happening? Fixed cost per
Increase.
unit. Increase. This is the point. This
So this all,
understanding. Yes, please.
this all are assumptions, sir. So if whatever you are explaining,
This
this
is,
all are
this is
assumptions. Sir.
analysis, not assumption. Assumption is there is no change in the cost relevant range unless and until there is a specific information. By default, we assume within the relevant range, neither variable cost nor fixed cost will change.
Okay.
Assumptions are different. This is analysis. What we are doing is analysis. This is analysis.
Understood.
Okay, now coming, let us go back to the example, what we discussed, laptop example. What is the variable cost per unit as of now for manufacturing the laptop? And what is the
100.
total fixed cost?
500,000.
Now, how many number of units here sold, manufacturer?
2,000.
2,000. What is the selling price?
1,000.
How many number of units sold?
2,000.
2,000. Now, this total cost function, I want to write. Now, tell me variable cost per unit is how much?
500.
Total variable cost if I manufacture and sell 2,000 units, how much?
2 million.
How much?
1 million.
1 million.
1 million.
What is the fixed cost?
500.
500.
If I manufacture 2,000 laptops, 2,000 into 500,000.
Yes, sir.
No, sir. Fixed price constant.
Fixed cost constant, no?
Of course. Sorry.
Is it
Yes, sir.
varies based on your production?
No, no, it will not vary.
It will not vary. So what
is
is
the
your
little-
total variable cost?
1 million.
1 million.
What is your fixed cost?
500.
500.
What is total cost?
1.5 million.
So I'm writing here 1,500,000. Total sales how much?
2 million.
2 million.
What is the profit?
500.
500,000.
Up to here, clear to everybody? If you have any doubt, ask.
Clear, sir.
So regarding the fixed cost, here is constant. Before we are saying that it is changing. No, that is, but
Okay. Okay. Which one?
fixed cost.
Mm,
When you are explaining the assumptions, the fixed cost also increasing and decreasing. Here is constant. What is the reason? No, I don't.
No. Per unit, it is increasing, decreasing, right? You understood the point.
Yes.
That is very important point that you need to understand here. Here per unit I am talking about. Say for example, whether you manufacture 0 units or 2,000 laptops.
Yeah.
What is your fixed cost?
500,000.
500,000. This is total fixed cost, right?
Yeah.
So if I manufacture 10 units, I manufacture 10 laptops, what is the fixed cost per unit?
When we
500,000 divided by 10 per unit fixed cost is how much now? $50,000, correct?
Yeah.
If I am manufacturing 100 units, what is the fixed cost per unit?
5,000.
5,000. If I am manufacturing 1,000 units,
500.
500. If I am manufacturing 2,000 units,
so
250.
per unit is increasing, decreasing, but total it's not.
it
Total is the
doesn't
same.
change. It doesn't change. Understood? That's why it is better to define fixed cost in total. Why? Because every unit, per unit cost is changing. No, 5,000 here, 500 here, 250 here. That means every unit increase or decrease, the unit price will increase, decrease fixed cost. Am I right or wrong?
Yes, sir.
So for company, it is very difficult to define fixed cost per unit. That's why the companies will mention our fixed cost is 500,000. It means it is given total fixed cost. Am I right?
Yes.
Yes. Say for example, first you understood this point. I will come back to the another point, but up to now clear, Basit, to you.
Yes. Yes.
So now what I did here, I took cost. Cost means what here? What includes this cost? If our assumption is the cost can be easily classified into variable cost and fixed cost. Fixed cost. So what I did, this fixed cost I took total, irrespective of our number of units manufactured. Because it is good, no, better to use the, it is no, we can't define fixed cost per unit and it is useless, no?
Yes, of course.
If I have defined today for this production, fixed cost per unit 2000, our manufacturing units are 2000. What is the fixed cost per unit means what is the cost now?
Yeah, we can define here.
We can define here. Say for example, immediately I have asked prepare 1000 laptop total cost statement. The person will take this 250 into 1000. How
Yes.
much we will get?
Yes.
250 only will get. But what is our total fixed cost?
Fine.
500,000. So it is useless to define per unit. It is applicable to the, suppose in your examination, your relevant range is 2000 and you have been given a fixed cost per unit as, say for example, they have given as 500,000 into 1000 means 500 per unit, and they have asked you at 1000 units they have given a statement, and fixed cost they have given 500 per unit at 1000 level of production, and in examination they have asked to prepare 2000 statement. Will this 500 be useful?
Here it is useful.
No. I think you misunderstood the point. This is important. In examination, they will confuse you. What they will do, they will give a 1000 unit laptop statement, variable cost statement. Sales, tell me how much? 1000 into
500. Oh, so
1000. Selling price is how much? 1000. So what is the cost here? 1 million. So what is the variable cost here? 500, no? Per laptop variable cost?
yes.
Now they have given in question fixed cost per unit 500 at 1000 level of production. So now tell me what is your fixed cost here?
500,000.
500,000. Now tell me what is the profit?
0.
Now they have asked you prepare variable cost statement at 2000 units level. 2000 into what? 1 million. What is your total sales?
20.
2 million.
Yeah.
2 million. 2 million.
2 million. Yeah.
2000 into 1000. Okay. What is your variable cost? 1 million.
Same. Yeah.
Now tell me what is your fixed cost? Would you like to multiply 500 with 2000 or directly you want to take 500,000 fixed cost?
500,000.
So this 500 is useless to prepare this statement. Not only this statement, even if I manufacture 1001 unit statement also, this 500 is useful. Per unit fixed cost is useful. Not useful. When it is useful to that particular level of production. So whenever in question it is given that Fixed cost per unit 500 at 1000 units of production means what is the total fixed cost?
That time we can, okay, define
The
that.
total fixed
500.
cost you need to calculate 500 and it is applicable to all level of production. That's why we ignore this 500. We will consider at any level point of time, if fixed cost defined per unit, you multiply that level to that unit only, it is applicable that one. What fixed cost you are getting, this is actually applicable to at any level, not that per unit. We will ignore that per unit. We will take the fixed cost total 500, but not 500 per unit. If you take 500 per unit, 2000 to 500 means that again it is 1 million. But actual our total, in reality, our total fixed cost is what? 500,000. So examiner, this is important point. Note down in your notebooks. How you will note down, I don't know. At any level of point, if a fixed cost is defined per unit at a particular level of output, so that definition is valid only for that particular level of output. However, total fixed cost will be true in all situations. So if fixed cost per unit is given at a specific output level, immediately your duty is that output level multiply with fixed cost per unit, total fixed cost. This total fixed cost is true at any level of output within the relevant range. Is it clear to you?
Yes, sir. Clear, sir. Very clear.
This is very important. यहाँ पर
Right.
बच्चे गलती करते. Okay, now I'm taking this equation. Now, shall I write this equation? Shall I write this equation? Total sales is equal to variable cost plus fixed cost plus profit.
Yes.
This equation. Okay, total sales, selling price always constant per unit, right? At all level of output. Is it true or false statement?
True.
True. So that means units, this total sales units, shall I write unit into selling price?
Yes.
Variable cost is also true per unit at any level of output within the given relevant range. True or false?
Yes. True.
So I am writing units into selling price. It is useless to define fixed cost per unit. So I will write fixed cost in total. Shall we multiply units into fixed
No,
cost per
no.
unit? No,
No.
it is useless. It is only applicable to that particular level of output. That's why fixed cost will be defined in total, but not the per unit. Profit is also in the same way. We assume we will take the profit. Why? Because profit per unit will differ at any level of output, right? Am I right or wrong? Profit per unit at 1500 laptops will be differ. Profit per unit 2000 laptop will be differ. So that's why profit is also defined in total. Is it clear to everyone?
Yes.
So this equation, I wrote unit into selling price is equal to unit into selling price, fixed cost and profit. Up to here, clear to everyone? If you have any doubt, ask.
Unit into selling price equal to unit into variable cost.
Variable cost, sorry. I'm checking whether you are sleeping or not.
Just now I wake up, sir.
Up to here, clear to everyone?
Yes, sir. Yes.
Basit?
Clear, sir. Clear. Clear.
Now, two homogeneous are there here. Units and units. I want to bring one left side. Shall I write units into selling price? This entire bracket, if we come this side, means it is already in positive figure. So it will get what?
Negative.
Negative. Then fixed cost plus profit. Is it clear to everyone, this part? Or do you have any doubt? Ask me.
Clear, sir.
This, we can't only take units this side. Why? Because it is multiplication form. So whenever you are bringing left side, you need to take everything what is multiplication with that. You can't simply bring u. You have to bring multiplication other component also. 5 into 3 is equal to 15. Total 15 you have to bring here. You can't take only 5 this side. So units into variable cost is equal to fixed cost plus profit. This step is clear to everyone.
Yes.
Yes.
Okay. Now this units into selling price, units into selling price. Shall I take common unit?
Yes.
What is remains?
Sales minus
SP.
variable.
Fixed cost plus profit. Up to here clear to everyone? All of you?
Yes. Clear.
Basit?
Yes, sir, clear.
Okay. Now what I am doing, units is equals to fixed cost F profit like this divided by this u into this total bracket portion. This is u into. So is multiplication, if I will send this side, it will take which form?
Divided.
Division form. Selling price minus variable cost. So this is actual total units if it is sold, total units sold with profit, fixed cost plus profit by selling price minus variable cost. This is the thing. We'll come back to this point again later. What I'm doing, just now we calculated some 1500 units or 1000 units. Which one we calculated just now? We got the total profit is 0. 1000 units, no?
1000.
Yes.
1000
1
units
million.
into selling price is how much?
1,000.
1000. So 1 million.
Then 500,000.
One variable cost was how much?
500.
500.
500,000. Fixed cost was how much?
500.
500.
So what is our profit?
0.
0. So I'm keeping this profit in this equation P as 0, assuming there is no profit, no loss. This a point at which there is no profit, no loss is a break-even point. You know this point?
Yes.
You know this point? You know this information? Break-even point means a point at which there is no profit, no loss. So if P is 0 here, so this equation will be how much? Units is equal to fixed cost plus profit is 0 divided by selling price minus variable cost. Which units this is?
BEP.
Break-even point in units is equal to fixed cost by selling price minus variable cost is known as contribution per unit. This is actually the formula you will see directly in the textbook. This break-even point in units is equal to fixed cost by unit contribution margin, UCM. In India, it is known as contribution per unit. Fixed cost by contribution per unit. Now you cross-check whether it is true or false. What is the fixed cost that we have in our example?
500.
500. What is the selling price
Selling price 1,000.
per unit? What is the variable cost per unit?
500.
500.
Contribution
What is the contribution per unit?
500.
So what is the formula? Fixed cost by unit contribution margin.
500.
Cost
1,000 units you have to say.
500. This is. So now tell me, is equal to how many number of units? Break-even units, how much in this example? 1000. Is it true here?
Yes, sir.
Yeah. This is the point. Therefore, break-even point in units is equal to fixed cost by unit contribution margin. This you will see in the textbook. but you should not by heart this thing. You should start from here always. Sales is equal
Equation.
to variable cost plus fixed cost plus profit. Sales and variable cost can be defined in units, but fixed cost, profit can be defined in units, but applicable to that particular level of output only. So that's why it is always mentioned total. Therefore, these units, I am writing units into selling price. This variable cost, unit into variable cost per unit. Fixed cost total, I am writing profit, I am writing this. What is I am assuming? My at break-even point, profit is 0. There is no profit, no loss. So I am substituting units into selling price. This homogeneous, so I am bringing left side. Units into variable cost is equal to fixed cost plus profit is 0 according to this assumption. Break-even point is a point at which there is no profit, no loss. So what I am doing, units is a common. So if it is common, remaining left is S minus. It is common, remaining left is variable cost per unit is equal to fixed cost. Therefore, units is equal to, this is in multiplication form, fixed cost by selling price minus unit. This units is nothing but this unit, no profit, no loss. So therefore, this is known as break-even point. In units is equal to fixed cost by unit contribution margin. The concept is this. You should know this properly. In examination, they will give you different kind of a problem. So by using this one, it is not possible to solve. But by using this one, it is possible to solve any kind of a problem. This is formula. This is equation method. I will show you another method, that is table method, that we will discuss later in advanced level. Today itself, but at later stage. Is it clear, or do you have any doubt? Ask me.
Clear, sir, equation.
If we want to convert this into sales, then simply whatever we get multiply by sales price.
Yes, yes. Suppose if you want break-even point in dollars, simply what you have to do, break-even point in units multiply with selling price. So we just got 1000 units into selling price is 1000 selling price.
Oh,
In
What is
revenue,
your total? What is your total break-even sales in dollars?
1 million.
1 million. So break-even sales in dollars is nothing but break-even point in units multiply with selling price, or break-even point in dollars is equal to, I have told you, break-even point in units, nothing but fixed cost by unit contribution margin multiply with this selling price. This break-even point units formula we know already. Fixed cost by unit contribution margin, I have written here, multiply with selling price. So therefore, break-even point in dollars is equals to fixed cost by unit contribution margin by selling price. So this is nothing but fixed cost divided by contribution margin ratio. Say for example, I would like to tell you, if selling price is 1000, variable cost is 500, my contribution per unit is 500. I'm defining this contribution in terms of sales. We discussed in the last class horizontal analysis. Do you remember that one? Horizontal analysis. Did we discuss?
Yes, financial statement analysis.
Financial statement analysis. We discussed, right?
Yes.
So common size means what? Converting everything into percentage. The sales will be assumed as
100%.
100%. If selling price 1000 is 100%, what is the variable cost? What is the variable cost? 500 is equal to how much? Nothing but how much?
50%.
50.
Contribution is how much? 50%.
50.
So this is contribution margin ratio means what? Contribution divided by
Selling price.
So this A by B into C can be written A by B by C. This is the logic here. So F by unit contribution by selling price is nothing but contribution margin ratio. In India, it is known as fixed cost by P by V ratio.
We can get the figure in dollars, no, sir.
We can get the dollars. Now let us see. Let us see what is the ratio here? Contribution margin ratio, 50%.
50.
What was the fixed cost? Tell me.
500,000.
500,000 divided by 50% means 0.5. Calculate.
1 million.
1 million.
10 million.
Tally.
1 million. Oh, yes, 1 million.
So this is break-even point in dollar. Is it clear? Do you have any doubt?
Clear, sir. In unit also I can understand, and the dollars also I can understand.
But most of the people will by heart these formulas, so they won't get the answers properly. So you need to know the formula properly. Please take a snapshot of this. Take a snapshot. Okay, we'll take a 5 minutes break. We'll discuss further. Okay.
Okay, sir.
If you have any
Okay.
questions after that, you can think and ask. Hello. My voice is audible to everyone?
Yes, sir.
Okay. Selling price is $1,000. Contribution margin ratio is 50%.
कोसा है सॉक्स
Sorry. Contribution margin ratio is 50%. If profit is $250,000, fixed cost is $500,000. Calculate total sales in dollars, calculate total sales in units. Do it.
ये सेलिंग प्राइस 1000 पर यूनिट है
1,000 per unit. $1,000. Use equation. Send me your solution on WhatsApp. Solution. Yes, Sajid, you are right. You use equation, Prasad. Use equation. Do it by equation. Very simple question this is. Use equation. What about units, Basit? Units. Dollars, correct your answer. Yes, perfect. All should try. I need answer. Yes, excellent, Adil. Rajat, use equation method. I have not asked the break-even point. I didn't ask break-even point. Already profit is there here. If this is the info, what is the total sales in dollars? What is the total sales in units? All should try. You take 5 minutes. I'm waiting for your brain should open up. You should try in different ways. Try equation method. All should try. Very few answers I have received. All should try equation method. Put your brain, give your brain the heat. Heat should come out from your brain.
Arish sir,
Yes, Sajid, tell me.
एक छोटा वीडियो डाला था सर आप वो इक्वेशन का, इससे पहले याद है?
हाँ,
वो थोड़ा हेल्पफुल हुआ सर, क्योंकि मेरे को वो इक्वेशन आता नहीं था पहले,
okay, okay,
उससे जरा
okay.
हेल्प। वो अब
That
तक नहीं मालूम मुझे।
mathematics.
हाँ मैथमेटिक्स, क्योंकि सर मैथमेटिक्स जरा वीक है मेरी, क्योंकि मेरे को
Okay,
नहीं मालूम 10th क्लास कैसा पास हुआ, मगर वो थोड़ा उससे हेल्प,
okay, okay, okay.
उससे हेल्प हुआ सर मेरे को।
जी, जी.
Accepting everything.
Sorry.
Accepting the
You
whatever.
know, I have also discussed. I will share with everyone that basic mathematics training also.
Please, please.
I'll share with everyone. What happened? All should try. So simple question, no? Okay, what is that? Okay, I'll solve this. What is it given here? What is asked? What is asked here?
Total sales.
Total sale.
In dollars.
Total sales is equal to always what? Profit. Let us do with total sale units. Total sales can we written as units into selling price, correct? Variable cost, we can write units into variable cost, correct? Fixed cost as it is, profit as it is. So what is given, you substitute there. Units are given, not given. Selling price is given. Units into selling price. Units into variable cost is given, not given. But we know that selling price minus variable cost is equal to contribution. When selling price is 1000, when contribution is 50%, so what is the variable cost ratio then?
50%.
For 100%, this is 1000. For 50%, how much? Variable cost is 500, contribution is also 500. This is the only logic here. Rest is normal. This is the only logic. Contribution margin ratio is given. Contribution margin, that's what this is, table method. Sales, variable cost, fixed cost. Unit information is there, dollar information is there, percentage information is there. So unit information given 1000. Sorry, this is contribution, I'm sorry. Fixed cost, profit. Sales 1000, contribution is given 50%. We know that this is 100%. Variable cost is 50%, automatic. Then 1000 is 100%, 100% is 1000, 50 is 500. This 50% is 500. Fixed cost is $500,000 total vision. Not needed here. Profit is also given. 250,000. So here units into variable cost, just we calculated, that is 500. Plus fixed cost is 500,000. Plus profit is 250,000. Then these two are there. Units into 1000 minus units into 500 is equal to 750,000. This is how much?
500.
Units into units common, 1000 minus 500 is equal to 750,000. Units is equal to 500 divided by 750,000. then units is equal to 750,000 divided by 500. 750,000 divided by 500. 1500 units is equal to 1500. Which units? This is total units, not break even. Total units. This is. Now multiply with selling price. Dollars. 1500 into 1000. 1,500,000. This is important. That's why formulas fail. आप फार्मूला याद करके जाते पूरे बच्चे CMA के. Break even point is equal to units into fixed cost by contribution margin per unit or contribution margin ratio. When they go and see the exam in question, what is this? This table method is also important. This is very easy actually, table method. You can crack any problem by using table method. This is where you need to open up mind. And I'm giving now formula. Sales required to earn profit is equal to fixed cost plus profit by CMR, unit contribution margin in units, or fixed cost plus profit by contribution margin ratio. This is in dollars. Now substitute. Fixed cost is 500. Profit is 250,000. Unit contribution margin is 500.
500.
750,000 divided by 500. 1500 units. 750,000 fixed cost plus profit. Contribution margin ratio directly given 50%. 1,500,000. This is the answer. How we got this? Earlier we calculated break-even point where P is 0. Now we are calculating total sales at some profit. Sum is desired profit. So now equation is what? Total sales is equal to variable cost plus fixed cost plus profit. Now P is not 0. They are asking at some profit. The profit is given. In the question, profit is given. If I want to earn 250, how many number of units I need to sell? If fixed cost is given as 500,000. This is the question. Now, total sales means units into selling price. Variable cost means units into variable cost. Fixed cost plus profit. Units into selling price minus units into variable cost is equal to fixed cost plus profit. Now units is a common, selling price minus variable cost is equal to fixed cost plus profit. This units is equal to fixed cost plus profit by, this is the division form, selling price minus variable cost. So this is nothing but sale at desired profit in units is equal to fixed cost by selling price minus variable cost is unit contribution margin. This is the formula.
So, Aribhai, in the same way I did, when unit contribution margin 50% already given, then automatically variable cost will be 50%, correct?
Correct.
So in that way also we can do,
Yes,
right?
yes, we can.
Straight away, yes.
Yes, you're right. I have not
But-
checked your solution.
Yes. But the thing is, putting the things in a formula is must.
Yes.
If you put the things in a formula, automatically it comes.
Automatically
if-
come, but
yeah.
question will be in any form that might
Yes,
not
yes,
be
yes.
available. That might not be available in formula. So sometimes question may not be helpful. कितने फार्मूला बहुत है फार्मूला याद नहीं रख सकते इसलिए इक्वेशन एक याद रख ली तो बस.
No, what I'm trying to say, not the formulas, this equation is very important.
Yes, very.
If you put the things in this equation, I believe, definitely you will arrive
Correct.
to the right answer.
But it
Yes.
takes time. That's why in examination we need to know the formula. Formula pe depend nahi rehna. Formula you should know, but how the formula is derived also you should know. That's the thing. So now fixed cost plus profit by unit contribution margin into I need to multiply with selling price. This is already in units we calculated here. Dollars means what? Units into selling price. Units we already calculated here. So fixed cost plus profit by unit contribution margin into selling price. We know that A by B into C is equal to, can be written A by B by C. So this is fixed cost plus profit divided by unit contribution margin by selling price. So this is nothing but what? Contribution margin ratio. Fixed cost plus profit by contribution margin ratio. Is this clear to everyone, or do you have any doubt?
Clear, sir.
So what we learned until now? Units into sales is equal to units into selling price. Variable cost, fixed cost plus profit. This is the nothing but sales is equal to, this is the golden equation. So now I am discussing break-even point. This is in units. This is in dollars. This is sales acquired at desired profit. So break-even point is equal to fixed cost by unit contribution margin. Here fixed cost by contribution margin ratio. Here fixed cost plus profit by unit contribution margin. Here fixed cost profit by contribution margin ratio. CMR is equal to UCM by selling price. UCM is equal to selling price minus variable cost per unit. So break-even point, this is in units. Break-even point, this is in dollars. Sometimes it is known as volume. Sales at desired profit is nothing but in units. Or sometimes it is volume. So this is in dollar. Or sales value. Sales in dollar. This is golden principle. Is it clear? Please take a snapshot of this.
Yes. Aribhai, this CMR, PP in dollars, fixed cost by CMR, right? So CMR arrives contribution by sales price.
Yes. Yes.
I think bracket में अगर वो भी लिख लिए
हाँ
contribution.
CMR is equal to, क्या बोले आप? CMR is equal to
contribution
selling price. ये लिखा ना मैं इसमें UCM बोल के.
अच्छा.
So you should not by heart this. ये automatically आपके जहन में आ जाता है. No need to by heart. The thing is that this is important. This is important. That's why actually we should not tell the formula. We should not tell the formula. We should practice with equation. Then we will come back to the formula. Formula we are teaching means I am sending one information to you on WhatsApp. See, if we teach formula, what happens to your brain? I think I have forwarded to you those people long back. Yeah, this happens. Check your WhatsApp. In the group. This happened. I'm giving one question, all should solve this thing. Company A, B, C, D, E. Selling price per unit is given. Variable cost ratio is given. Total sales in units given. Total contribution margin is given. Fixed costs are given.
$120,000 or 12,000?
This is 12,000. This is 124. Profit or loss. This is 20,000. Do it, find out the question marks, take situation 1 first, complete it. Take situation 2 first, then complete it. Use only equation method. And table method, use table method. What is the table method? Units, dollar, percentage. Selling price, variable cost, contribution, fixed cost, profit. This is in units. This is in dollars. This is in percentage. Use this table method, if not equation method, and solve the 5 minutes time. Tomorrow by evening, I am launching the app. Uploading almost done. So today's video also I will upload. So tomorrow by evening, India 7 p.m. time, you can download. And the payment link is there. I will give code 3,300 rupees we are charging. No, that code for each person I am giving code. So when you click the payment button, it will ask code. So for each student there is a code generated. So it is important. Why? Because this sale should not go outside. That is $55,000 value. Sorry, 55,000 Indian currency value. And once a person is entered in that one means, salah, we can't remove. We can remove that. The thing is that how can we remove? So that's why each person will get a specific discount code. By using that, you can pay 55,000 INR value, 3,300. Okay. So by tomorrow 7 p.m. it starts. So I'll be interacting with you. I'll be sending code on WhatsApp. You can pay and enter into that one. You can watch the videos. Everything will be there now. Now all mock exam, all homework, everything through app. Slowly we will also shift this class through app only. But at presently we will go with Zoom. We need to cross check that it is working properly or not. So immediately, not tomorrow onwards, one testing we will do first, then we will shift. And this is valid up to October. Up to October examination, this is valid. After that, different thing. Up to October, you can access our app. Question A, question B answer, question C, question D answer, E, F, H, I, J. So you need to send answer, or you can write total table and send me the answer. You should have completed by this time, right? At least send me A and B answers. Either use table method or equation method. To you, okay? The rest you can do. Yes, Mustafa bhai, very good. Excellent. Selling price is asking dear, not sales, total sales. Yes, Sajid, you are right. Perfect, excellent. But selling price is asking. Yeah, you are paying through app you are paying directly also you can pay, but it takes time. App, there are so many facilities are there. If any problem is there, directly also we can pay, no problem. That I'll discuss with that particular person who is assisting us in launching app.
Okay, sir. Thank you.
Okay. Okay, you can use the table method according to me. Table method percentages. If variable cost is 60%, so I'm writing here table method. Selling price, variable cost, contribution, fixed cost, profit. I'm writing per unit. I'm writing total. I'm writing percentage. So selling price per unit is not given, means this is 100%. Variable cost is given 60%. Total sales units are given, right? So total sales units are given. This is out of the context. Here we will write. On the top we will write. Total contribution margin is given. This is given. So this is equal to 100 minus 60% means how much is this? This percentage is how much? 100 minus 60. Variable cost ratio is given here. This is 100. This is 60. This is how much? Contribution margin ratio how much?
40.
40%. When 40% is 10,000. 40%. Sorry, 40% is 10,000. What they ask? Selling price, no? 100% is equal to how much?
Is it 10,000 or 20,000?
20,000. 20,000.
20,000 is given. Sorry, yes, 20,000. So 20,000. 40. I'm just checking you're sleeping or not. 40% is equal to 20,000. 100% is equal to how much? Tell me. 100 into 20,000 divided by 40. How much?
50,000.
Sorry?
50,000.
50,000. Then divide with this selling price you want, no? We know
5.
that units into selling price is equal to total sales. So units are given 10,000. Selling price we don't know. Total sales are given. Just now we calculated 50. So selling price is equal to 50,000 divided by 10,000. How much?
5.
Fine. Is this clear? Or variable cost per unit is given to us. Variable cost per unit is given to us.
Not given.
Not given. Then what is given per unit? Any information is given?
60%.
Contribution is given. How much contribution?
20,000.
20,000. When contribution is given 20,000, total contribution, what is per unit contribution?
3.
2
This
Two.
2 is also equal to how much percentage? For 40% it is 2, 100% is equal to how much? In that case also you will get 5. In a different way we can solve the question. Either use formula or table method. I use normally table method. It is very easy. Are you getting my point, all of you? This is clear to everyone, this table. Hello?
Yes.
If you have any doubt, ask me. Basit, are you getting this table?
Yeah, I got it, sir. Yes.
What about others? Prasad?
Got it.
Prasad?
No, I'm not getting.
Not getting. Okay. Up to previous discussion, Prasad, is it clear to you? Previous discussion?
Yeah, yes. Clear.
Perfect, 100%, right?
Correct.
Okay, what I am doing, this is the, the sales minus variable cost is equal to contribution, correct?
Yeah, yes.
So from these we will deduct fixed cost. You will get what? Profit, correct?
Perfect, yeah.
So in this table, what I am doing per unit, I am writing here per unit. And here I am writing total value, total dollars, total value in dollars. That means unit into something. Here I am writing percentage. Now given information selling price per unit is not given, correct? But variable cost ratio is given, correct?
Yes.
So this is 60%. No, variable cost ratio means this is 60%, correct, sir?
Correct.
And always sales are 100%. Am I right or wrong?
Absolutely.
Absolutely. Then what is the contribution?
40%.
40%. Total number of units are given. So I am writing on the top. Total number of units, top, I am writing 10,000. I will write here per unit. This to this is this. This and this is this. This and this is this. This multiply this is, you will get this. Like that. Understood, Prasad?
Yes.
Okay. Now what is given? Total sales units given, I have written on the top. Total contribution margin is given $20,000. So where I should write? Here or in the middle?
Total dollar.
Total. So 20,000 it is. Understood? Then per unit is how much? Tell me. This into this is 20,000. 10 into something is equal to 20. Then X is equal to how much?
Wait.
2, no?
Yes.
So 10,000, this is 10,000. So this is 2. When 40% is 2, 100% is how much? How much, Prasad?
Okay.
40% is 2, 100% is how much?
5.
I have written this 5. 10,000 into 5 is 50,000, correct?
Okay.
Or 40% is 20,000. 100% is equal to how much? 100 into 20,000 divided by 40. You will get 50,000. Understood, Prasad?
Correct.
Then 60% of 5 is how much? 3, correct?
Yeah. 30,000.
Fixed cost is already given to you. 30, correct? So this is 30,
12,000.
20. Fixed cost is 12,000. Then what is the profit, Prasad?
8,000.
There is no need to calculate for fixed cost and profit per unit. Understood? Percentage you may calculate. 12,000 of 50,000, how much? 24%. 8,000 of 50,000, how much? 16%. You can calculate, but it's useless. This is 16%.
Yeah.
Is it clear this table method to everyone? If you have any doubts, ask me. किसी को भी अगर कुछ डाउट है तो पूछोगे. साजिद,
Clear है sir, clear है.
मुश्ताक,
clear है sir.
बासित, फहीम.
Clear.
Okay. Fahim, Mr. Fahim?
Yes, sir. Samamya.
Okay. Miss Indu?
Yes, I got it.
Junaid?
Yes, sir.
Okay. Adil? I think it is clear for you.
Yes, sir.
Azhar? I think for you also clear. Mustafa? Mustafa bhai? Ubaidullah?
Clear, sir. Clear.
Rajat?
Yes, sir.
Mr. Siraj? Clear to you?
Yes, sir. Clear. Thank you.
Tanu, you just joined. I don't think you may get this point.
No, actually, I got it, sir. Thank you.
Okay.
Thanks, sir.
This video also I'm uploading tomorrow. You can watch it.
Thank you. Thank you, sir.
Beginning discussion is very important.
Okay, sir.
Now, did I open up your brain by doing these things? कितने लोगों का did you open up?
Yes, yes, sir.
Okay. Few more questions we will do, then we will discuss after 10-15 minutes. You know that this sales variable cost contribution fixed cost, this profit is operating profit actually. We assume there is nothing but EBIT. We assume I is 0. If I is there, we will do I also, but at presently, let us assume I is 0. So then directly tax. You will get, this is operating income or operating profit. This is nothing but net profit or net income. Net income. In examination, if they will give you calculate desired sales, if profit is 10,000, we know that this profit given is operating profit. This profit given is operating profit. Now in exam, what they will give you, if net income is 6,000, calculate desired sales in dollars, desired sales in units. Then that is a problem. That is a problem. If net income or in the exam they have given profit after tax is 6,000 is given, and you have been asked to calculate desired sale, desired units, if it is asked. So then in that case, how to do the problem? Same previous problem, what I started, I'm giving you. Selling price is 1,000, CMR 50%, profit is 250, fixed cost is 500, is profit 250. Instead of that, say for example, 50,000 into this profit, instead of this, the same question I'm changing now. Profit after tax is 150,000. Calculate total sales and total sales in units. Do it. Same question I'm writing once again. Selling price 1,000. CMR is equal to 50%. Profit after tax is given 150,000. Profit before tax is given, sorry. Fixed cost is given 500,000. Calculate total sales. This is unit. Tax rate is 40%. Additional information is tax rate is 40%. Now you have been asked to calculate total sales in dollars. Do it.
Is it 375, sir?
Which one? Which one?
Sterling units.
Sales.
Yeah.
What
Yes.
was the previous answer? Same answer only.
Yeah.
Answer is same. There is no change. इससे पहले का जो आंसर है वही आंसर रहेगा. You told 1,500 unit. Basit?
Oh, it's 375 because the VAT is given 150, then tax is 40,000.
Yeah. Answer same.
Okay, okay.
The logic is here. I would like to tell you, all of you. Actually, I'm just cross-checking anyone of you did or not. Rest of the problems you have to do in this table. Okay, I just discussed one. I have just discussed this case. Okay, rest of the case you have to do using table method, all of it. Please take a snapshot of this. And today itself, all should send those who have attended. Complete this. From today only, please focus. Tomorrow you have a holiday. Day after tomorrow also. I'm uploading all the videos. Be accurate. Be on. That means be. I mean to say. Pace should be along with us now. Don't delay anything now. Now pull up your socks. April started. April, May, June. From today you have to work hard. I'm telling you. No negligence now onwards. And 19th is the last date for IMA. Again, you won't get this golden chance, 40% discount until 31st December. Only again they will give in January this discount. So please, even if you are writing in October, you have to pay this amount to the IMA. Register yourself with IMA. If you are not registering now, that means khalas gone. You can't do the CMA, I'm telling you. It's very difficult. Sorry.
So what is the last date, sir?
19th.
So the 19th of
April.
ah,
Which one you are
offer you're
talking
talking
about?
about. Offer you're talking
Offer.
about.
Exam fee payment is 15th June. On 15th June, you can pay. On or before 15th June. I'm
Okay.
talking
Sir.
exam. Yes, please.
Sir, exam fee also they are giving discount.
No,
Suppose
no,
if
no. Repeater only they will give 30% discount.
so
Exam fee
new candidate who will register for the first time, for them that is 40% discount.
that is entrance fee and membership fee.
CMA fee.
Not the exam fee. Exam you have to pay $460.
Okay, sir.
Okay, I'll show you this sum, then we will disperse. Whenever profit after tax is given, profit after tax is not useful for us. That's why sales minus variable cost contribution minus fixed cost we will do profit before tax or operating profit or operating income. From this we will deduct tax and then your profit after tax is given. If profit after tax 150,000 is given to you, when tax rate is 40%, if tax rate is 40%, could you please tell me profit after tax equal to how much percentage?
60%.
60%. If 60% is 150,000, then what is the profit before tax? It is always 100%. This is 100, tax is 40, this is 60. Always, whenever profit after tax or net income is given, convert to the operating income or convert to the profit before tax. That is, if 40% tax means the profit after tax given is equal to 60%. If 60% equal to 150, we need not tax, we need the 100%. This is profit before tax or operating profit or operating income. Therefore, 100% is equal to how much? So 100 into 150,000 divided by 60.
250,000.
250,000. So in examination, if profit after tax or net income is given, you convert to the profit before tax or operating profit. Then normal problem. Afterwards, it is normal problem. You can do just like what we did, table method or whatever it may be. You will get the answer. That is $1,500,000 answer. Is it clear or do you have any doubt? Ask me. Is it clear or do you have any doubt?
Sir, can you tell me how you get the contribution margin?
Okay. Okay. So I'm using here table method. Okay. Sales, variable cost, contribution, fixed cost, profit before tax or operating profit or simple profit. So we already calculated here 250,000 given in the question, not given in the question. Profit tax is tax and the profit after tax is given actually 150 and we calculated in this way.
Yes, I understood that, sir.
Yeah. Now shall I tell this thing? Sales and all?
Yeah, the contribution margin, how we calculate it.
Yeah. What I am doing actually, This up to this information, I'm using unit here information. This is total table and this is percentage. What information given? Selling price 1000 is given. It is per unit, right?
Yes.
CMR is given. CMR means this percentage is given. Contribution. How much percentage?
50%.
50%. If this is 50%, sales is 100% always, correct?
Yeah, yes, sir.
Variable cost is 50%.
50%.
Then 50% is given. 100% is 1000. Then contribution is how much? 500. No?
500.
Variable cost is how much?
500.
500. How many number of units we are calculating? We don't know. Correct. Profit is already given 250. What is the fixed cost?
500,000.
500. So profit plus fixed cost is contribution.
Yes, yes.
That is how much?
750,000.
50% is 750. Correct.
Yes, sir.
50%
So
is 750,000.
variable cost also is for
They
750.
are asking only sales in dollars. Correct.
Yes, sir.
So sales is always how much? 100% is equal to how much? 100 into 750,000 divided by 50.
50.
1,500,000.
Okay, sir. Thank you.
1,500,000 divided by 1000, you will get per unit.
Yes, sir.
So the number of units of sales. Number of units of sales is how much? 1,500. Units is 1,500.
1,500,000.
sales.
Thank you, sir.
In this way. So table method, equation method will help you in CMA exam. These formulas won't will help you. Even आप भूल गए तो भी formula की no problem. भूल जाना ही अच्छा है मैं तो बोलता हूँ formula. When required, use it. Otherwise, use the table method, use the equation method. Some mathematical gimmick is there here that if you don't know, I have already created one video for Sajid. I think Sajid, how did I share that one?
Gmail, sir. Google Drive.
Google Drive only, no? Okay. Okay. So I need to upload that in app. Fine. Up to here, clear. You can go now. Those who are having doubt, you can stay. I will explain. Today's session is over. Tomorrow also we have the same. We will continue this section 3.
Thank you.
Okay. Thank you.
Thank you very much.
Yes, sir. Assalamu alaikum.
Walaikum Assalam.
Thank you, sir.
Thank you.
Thank you, sir. Assalamu alaikum.
Walaikum Assalam. Thank you.
Thank you, sir. Assalamu alaikum.
Walaikum Assalam. Rajat, Mustafa bhai, Miss Hindu, do you have any doubt?
Sir,
Still, my doubt is there, sir.
Okay,
Like
okay, no problem. Yes.
my doubt is roaming in this selling price dollar unit and dollar.
This one.
Yes.
Okay. Shall I explain once again from the beginning? Miss Hindu, shall I explain from the beginning? Selling price, sales, not selling price, sales minus variable cost is equal to contribution less fixed cost is equal to profit. That is nothing but profit before tax. So what I am doing here, I am writing per unit. Here total. Total you will get unit into this per unit information. Units into the respective value. And here I am writing percentage. So in the given question, selling price is given 1000. So I am writing per unit as 1000. That means 1000 per unit. This is unit means per unit. Selling.
Sir, sorry to interrupt.
Yes,
Sir, can you do this with that B1? You gave 4 companies, no, A, B, C.
Acha, okay.
With the
Okay. I will do. Yeah, table method I will use.
This $50 is getting confused. That's it.
Selling price per unit, that is $50.
Total unit 4,000. That is not in dollars. I mean, like that is.
That is in not dollar. That is number of units. 4,000 units. This is in unit. Here it is given. Total sales in units.
Units.
Selling price per unit. This is selling price per unit. Selling price. Understood. Shall I explain this?
Yeah. That only that B1.
Okay. This
Rest
one.
I'll. Yeah.
Okay. So now what we have to do here, sales minus variable cost is equal to contribution less fixed cost is equal to profit. What is given, you write it down. This is per unit. This is total. This is percentage. 50 is given. Where should I write? Here, correct?
Yes.
And here units, total number of units sold, how much? 4,000, correct? So that means sales will be 4,000 into 50, how much? 200,000, am I right? Which is equal to 100%. Always this is 100%. Okay. Variable cost ratio is not given. Total units is given. Total contribution margin is given. 80,000. Now you tell me 100% is equal to 200,000. That means 200 is 100%. 80 will be how much? 200,000 is 100%. 80,000 will be how much? 80,000 into 100 divided by 200,000. How much it is coming?
50%.
No, value, how much it is coming? Percentage it is how much? 40 or 50?
40%.
40%. Miss Hindu, are you following me?
Yes, sir. 40%.
40%. That means this is equal to how much percentage?
60%.
When 100% is 50, 60% is how much? $30, no?
Yeah.
So this is how much? This is 20. So this is already we got percentage. This is how much percentage variable cost ratio? 30%.
60. 30.
30, no? Sorry, sir, 60%.
60%.
60%. Okay. So 80. Then what fixed cost they are asking? We don't know the fixed cost, but we know the profit. How much?
$20,000.
Up to here, clear to you?
Yes.
So now you tell me 80 minus something is 20.
20.
So that 80 minus something is will be how much? This is
60.
60. This is the answer. Fixed cost is 60,000. 40% is 80, then 80 is 40%, 60 is how much? You can calculate this percentage also.
Okay.
Rest like that.
Okay.
This is 10%. This is, I think, 30%.
Okay.
Okay. That's it.
Okay. Thanks. Thank you.
Rajat, do you have any doubt?
No, सर मेरा सेक्शन ए में जो लास्ट क्वेश्चन सर आपको भेजा था कि कंफ्यूज था वो
कौन सा
सेक्शन ए में जो फाइनेंशियल एनालिसिस के थे उसी क्वेश्चन लास्ट
अच्छा last question I have told you, no, the variable cost direct costs are volume will affect the direct cost. Indirect cost volume doesn't affect. Understood?
को सॉल्यूशन सर भेजा था मतलब कि प्राइस रिलेटेड लेके सॉल्यूशन निकाल के
हाँ, तो हम क्या करेंगे उसको? We will discuss. I will explain the concept. You do it. Okay, understand? You understood what I am trying to tell? Just a second. selling price, total sales always units into selling price, correct?
Yes.
Right? Then direct cost means COGS. Understood? COGS is direct cost. Why? Because it is vary with the, it affects, it is proportionate to this thing. So COGS is always unit into COGS per unit, correct?
Yes.
So then you will get the gross profit from this. From this, you are deducting the indirect costs. Indirect costs which are given, whatever it may be, that advertisement. What is given, I don't know. I don't
Yes.
remember that. Whatever it is. So you will get the net profit here. Understood?
Yes, sir.
So now point is what? There is increase in units. There is increase in concerned selling price or COGS or something like that they have given, correct?
Yes, sir.
So what you have to do, you take the existing value, 100,000, whatever it may be, this total, multiply with the, if units are increased by 10%, multiply with 1.1.
Yes.
100,000 is there. 10% means how much? 10,000, no? So 100 plus increase 10,000, total will become how much? 110, no? This 110, how we got?
Yes.
110%.
One.
Nothing but 1.
110%.
Okay, you multiply you that one, and also increase in selling price is also there, no? If it is
Yes,
decreased, if it is decreased by 5%, take 95% or 0.95. If it is increased by 10%, 5%, take 1.05. That way. So this
Yeah.
we will do for sales, this we will do for COGS. But for the indirect cost, we will take only, we will not multiply with units. We will multiply with the respective increase, decrease. That means the indirect cost is increased by 10%. So you will take 1.1 here. The increase in units will not affect the indirect cost. That is the only point.
Yes.
Understood?
Understood, sir.
हाँ अभी करो आ जाएगा आपको नहीं तो फिर I will explain in next class. To all I have
Yes,
to explain. No, that's the thing. Okay.
Thank you, sir.
Okay.
Thank you, sir. Good night.
Mustafa bhai,
Good
do you
night.
have any
Good
doubt?
night.
Sir, thank you. Good night.
Thank you. Good night. Good night. Mustafa bhai, कुछ doubt है क्या? Hello. Okay.